The end of a fiat money or a paper money system is always the same, and it's always hyperinflation. And we've seen it exactly that happening over the last 3-4 weeks again. Big pressure in the markets, banks going bankrupt. We had a bank run in America, and the response immediately is to print money.
Today, we have investment strategist Florian Grummes discussing the end of the fiat money system and how hyperinflation has caused the biggest collapse in currency the world has ever seen. Grummes believes that the situation is unfolding in stages, and the system will continue to print more money to save itself. He suggests, however, if more money is not printed, there is a risk of a complete breakdown of the monetary system. Grummes also discusses the stock market and believes that even though it's currently going higher, it may not outperform Bitcoin. Grummes predicts that we may experience a dramatic shift during August and September and cautions against the widespread optimism that's completely opposite of what the data is showing. Let's get right into the latest interview with Florian Grummes as he gives his market prediction for 2023 and how this will affect Bitcoin and the crypto market in the coming months. If you enjoy the content we do here, don't forget to hit the like button and subscribe to the channel. Let's get right into the video.
The amount of money that is necessary to be printed is getting bigger and bigger and bigger. And we're talking such big amounts of numbers nowadays. If you compare this with like 15 years ago during the financial crisis, yeah, it's going to be bigger and bigger. And I think it's unfolding in stages. Yes, we don't have hyperinflation right now, but I assume to save themselves, to save the system, to save the financial system, they continue to print more and more money whenever there's stress appearing. And there is so many reasons now that they won't be able to continue their hiking. I mean, look, they tried to tighten the balance sheet for 12 or 15 months, and within 2 weeks, 2/3 of it, they had to print again, basically. It's not working, and people have to realize this. But of course, if you or I would be working at the Fed making these decisions, we would probably have to do the same decisions like they're doing, because otherwise we would be risking a complete anarchy and breakdown of the system immediately. To keep the system running, they need to print more money. And that means that overall stock markets will go higher. You might not see them outperforming other assets like gold or Bitcoin. And of course, within the stock market, you will have certain stocks performing much better than others. But generally speaking, if we are on the road to a cracker boom and hyperinflation over the next few years, stock market should go up. Everybody was super bearish in October last year. The hedges, especially by the retail traders, have been unseen and unheard of. And what happened was a big short covering rally, which then transformed into a bull market, basically, in stocks. And now the latest numbers again show that the retail investors and traders have once again ramped up their hedges and their shorts to protect their stock market positions, which again tells me that markets will not crash, they will not go down. Instead, much more likely they will go sideways or higher from here. Because yeah, if everybody's short, the opposite will happen. And I think smart money, you have to be careful. There's also lots of indicators that could be misleading. But generally speaking, I think that smart money is rather buying than selling, while the dump money, so to speak, is rather hedging and buying shorts. And of course, if you're short and the market is not going down, you have to cover. And that means you will be the next buyer driving the market higher. And so I'm not like a super stock market bull here, but I'm not in the camp expecting a crash in the stock market. I think overall stock market probably sideways to higher. And yes, you will have the typical volatility and very likely a few weeks or months. Typically seasonality wise, it's going to be August, September, a little bit more challenging time for the stock markets. But overall, I think given that the market, that the Fed basically has already turned around, even though they're not saying it, but you have to look at their actions. I think that overall stock market will drive higher. Because I'm a little bit skeptic that gold can immediately start run higher to new all-time highs from here, because I see too much optimism wherever I go. Wherever I look, whatever I read, everybody's bullish, everybody's expecting new all-time highs right now. I wouldn't be surprised if it takes a little bit longer and maybe we have one more pullback, let's say 1900, 1920 over the next few weeks or months. Usually the seasonal cycle for gold is not very supportive in spring. Usually you get an important low somewhere in June, most of the time July or early August. And from there you see a strong rally. And that would be the rally that could take gold towards $2,500 until the end of the year. So I'm a gold bull. I think very short term, I'm a little bit cautious. I think people are too bullish, but in the medium term, I think that gold will go to new all-time highs. And I think 2,500 by the end of the year is possible. We talked about the de-dollarization, and I think that's the big trend right now, harming the US dollar. It's more and more obvious that China is taking over the leadership on that planet and that the West in general is not strong enough anymore to counter that. So you've seen Saudi Arabia basically moving to an alliance with China and Russia, and they start trading oil in renminbi, and the Saudis can then exchange their renminbi at the Shanghai Gold Exchange against gold. And that, of course, is not only driving the gold price high because there is a physical gold trade happening now, but it's also driving the US dollar lower because the days of the US petrodollar are basically done. I mean, this is the last 50 years. The Americans have been able to force their US dollar on the rest of the world because any oil trade had to be manufactured in US dollars. And that's done. I mean, the Indians, the Chinese, they now trading and buying their oil in renminbis or in rupees, maybe even in rubles. So things are changing, and it's a drastic change, and it's actually unfolding very rapidly now. And unfortunately, the people in the West, the politicians in the West, and also the central banks in the West still believe that we are in the same setup like the last 50 years. And the wake-up call is already happening as we speak. I don't think that the yuan is going to take over in the next few days, weeks, months, or years, for sure not. But just for the US dollar coming down from that dominance will make a big change. And I think the current exchange rate is kind of reflecting it already. And I think the dollar is going lower from here. We had a massive multi-year top last year in November. And again, there are so many macro factors at work now that I think that the dollar is going lower, which obviously will be very helpful and bullish for gold. It will also help Bitcoin. It will help the stock markets. It will help commodity prices. But of course, if you do your trade, if you do your investments, if you do your business in US dollar nominated currency, then at some point you will questioning if this is the right currency for you to continue to work with, right? If you see that it's constantly losing value.
Grummes warns of the trend of de-dollarization and the shift in global power dynamics from the West to China. He mentions Saudi Arabia's alliance with China and Russia and their move to trade oil in non-US dollar currencies, such as the Indian rupee or the Russian ruble. Grummes notes that this shift is happening rapidly, but many in the West, including politicians and central banks, still need to fully acknowledge the change. He believes that the dollar's decreasing dominance will have significant impacts on various markets, including gold, Bitcoin, stock markets, and commodity prices. He warns that those who conduct their business in US dollar-nominated currency may need to reconsider their approach due to the currency's depreciation. Grummes believes that even though the stock market is going higher, it may not outperform Bitcoin. He also suggests that businesses with costs in dollars may experience losses despite attempting to mitigate them. What do you think about Florian Grummes' latest prediction, and how the collapse in fiat currency will affect the crypto market in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.